to me, growth marketing is finding opportunities outside of programmatic advertising that are authentic to the brand that drive sales.
When it comes to success, it's not a one-size-fits-all approach. The journey to the top is filled with roadblocks, bumps, and U-turns. And what better way to fast-track this venture than by learning from the best? Welcome to Breaking It Down with Yogin Patel.
All right, Wes, what's going on, brother? Could you go ahead and start with just, introducing yourself and what you're currently doing?
Yeah, for sure. First off, thanks for having me. My name is Wes. I'm the growth marketing manager now, head of growth marketing at Vincero Collective. We make premium lifestyle accessories for today's most ambitious people. So started off with, our flagship product as, being a watch, very like premium styled watch, but at an accessible price point. And then from there, we started expanding into other accessories. So now eyewear is a huge category for us. We've broken into jewelry. And then there's definitely categories coming in this year that we're looking to expand into. So my role within the business is specifically, partnership marketing. So anything that is outside of programmatic paid media is something that I'll handle. So when we first started and when I first got into the business, so they were about halfway in. Business is about 8 years old now. I started about 4 years ago. They started seeing a lot of traction within the YouTube influencer space and needed someone to come in and scale those efforts. So brought me in, kind of gave me the rundown of the business. We quickly scaled YouTube. It was probably one of the best like growth channels. We were one of the first like 5 or so advertisers to really like start spending within the space and getting, product out to influencers. Really like shaping what, people are doing now as far as advertising goes within YouTube. So a lot of my time, the first, I would say like 12 to maybe like 16 months was just scaling YouTube specifically. And then just from those learnings and how we were able to make YouTube partnerships work, we started taking them to other channels. So I started working in the affiliate space, moved into the podcast space, more, specific, brand partnerships like you and I did with Snow, which we can get into a little bit later. And then just started kind of evolving like this growth marketing mix as a whole. And just managing it as you would, programmatic ads. So just building a structure where, on a monthly cadence, we know how much spend is going into each of these channels. We're monitoring performance, and we're just scaling where the opportunities are. And that's really been my role over the course like the last 3 years. I've moved into a more like business development role over the last probably like the last 10 months or so, trying to find new revenue streams for the business. So and we can get into all this in more detail, but just to kind of give, full context of things. We just opened up 2 flagship stores, which was an initiative that I've been pushing for the team. One in LA in Abbot Kinney, and then one in New York as well. So that's been a big focus. And then this year also getting into wholesale, becoming more omni-channel focused. Those are things that I'll be leading more so now. And then just managing a team of growth marketers kind of on the stuff that I touched on first. So happy to touch on any of that stuff. We worked together for a little bit there.
Yeah.
But yeah.
I love it, man. Lots to unpack there. A couple things I want to start with is what you said you started with Vincero back in 2016, or what was the year?
Yeah, excuse me. I started in 2018.
2018.
Or I'm sorry. Yeah, 2018 in February. Company started back in 2014, and just, I guess for some more background on the business, just so listeners understand, we're about 8 years old now. We have 3 founders that are best friends growing up. They went to Gonzaga together. They took a trip after graduating to China for 5 years and really didn't know what they were getting into. They knew that they didn't want to join the rat race and do like a standard 9-to-5 corporate job. They were, super ambitious people, lived out in China for 5 years, just kind of figuring out how to manufacture products. They worked as like a mediary between other brands as far as some leather good brands that were trying to source materials, and they worked kind of hand in hand with the manufacturers to kind of source those products, quality check them, etc. So over their time being there, they really just got just like a crash course of how to manufacture products in hard goods. So through that learning, they were like, all right, we need to figure out how to take some of this stuff back to the States and what we've learned. And, they looked around, they were working with some leather goods. They realized the weight and stuff wasn't optimal for shipping costs. And then they kind of stumbled across the idea of like, they looked at the watch market. There's, extremely known brands within the watch space. But there wasn't anyone really speaking to them as far as price point, quality, and then just more of like a modern take on the style that they wanted. So that's really what emerged the idea of it, especially going back to the cost of shipping. Watches are, much smaller, much easier to get across borders, easier to clear customs, just a cheaper overall shipping and customer experience opportunity. So took that back to the States, started their business really bootstrapped. It's all self-funded, and just grinded at it for like 2-3 years. Started seeing traction like late in year 2, started finding some influencers, like I mentioned on YouTube, brought me in, scaled that, and then started growing some of these other channels. And then the business has just been growing since then. So just wanted to give some background on the start of the business.
No, love that, man. Let's even go even further back. So talk to us about the background that you come from. Where were you raised? Were you always thinking that you would be in the D2C space? How did you kind of get started in this industry?
For sure, yeah. I'm from Columbus, Ohio, so I grew up in a suburb town north of Columbus called Worthington. Pretty quaint spot, like really like down to earth people, good people. Really nice family. Grew up with 2 other siblings, and just Ohio. There's not much going on geographically, so the big thing for us is sports. I grew up like 10 minutes away from the Horseshoe, which is Ohio State's football stadium. So just really grew up entrenched in sports, huge NFL, NBA, MLB, just sports are everything in the middle of the map. And I think just that idea and just growing up with sports just gave like a very ambitious attitude towards everything that I did. I didn't grow up like a really like great student within like high school. I was really focused more on sports and girls and just having fun and that kind of thing. But I always knew that, post graduating high school that there was something out there that was going to be more geared towards what I was trying to do. So I knew college was obviously something that I wanted to do just because you got to choose. You had more choices as far as courses and what you wanted to dive into. So after graduating, I went to the University of Cincinnati to get my bachelor's in marketing and international business, which was just a mind-blowing experience for me. So the courses that I took were great, and I met a lot of people within business, but a great part of what they do within their business program is it's mandatory that students have an abroad experience. So I knew that a big part of my college career was going to be focused on travel. My siblings, they went to the University of Ohio, and they traveled in their collegiate experiences. And I just remember stories of my brother being in Hungary and telling me like these amazing eye-opening experiences that he had and the courses that he was taking abroad, and just how it opened his perspective to new opportunities. So my first experience doing that was the summer of going into my sophomore year. I went to Singapore for 3 months and worked for a company called Possible, which is like a large media marketing agency. They work with like Adidas, Nike, HBC, like all these big banks and big enterprise businesses. And that just blew my mind open. So like, Singapore is a very unique place because it's so far away from, the United States. The culture is so much different, but yet they've adopted English as their primary business language. It's really, they push a lot of weight as far as what they do as a small country. You can get to one end to the other within, a couple hours on the train. So it's a really small place, but it's very hustle and bustle attitude. And it was really just my first experience in like a corporate business. I was super young. I was only 19. I was working on accounts for like Adidas and trying to come up with marketing strategies. So it was really like a crash course of getting into the space and like just seeing people in their profession and diving into their careers. And me being such a young person so far away from home, just absorbing, everything that they're doing, trying to figure out how I can fit and provide value, even though I didn't have a ton of experience. I'd worked with, a couple of startups and just helped out here and there in marketing, but really just was very, very green. And I just love the idea of just hustling and just working and trying to find connections, and being a good communicator was definitely something that had always given me an opportunity to find something else. Not just, having some sort of pedigree or being able to say that I came from some sort of background that I didn't. I was able to communicate, find connections with people, and then ultimately get to places that I wanted to get to. So that was a really impactful experience, to say the least. From there, I ended up traveling more. I did another study abroad trip, and lived in Brazil for 3 months with my best friend. So I worked in or studied in UFSC, which is a college in Florianopolis, Brazil, which is a small island on the south east side of Brazil. Probably like my favorite place I've ever been in the world, and somewhere that I would like to buy a property in and potentially settle at some point. But just a mind blowing, beautifully, just beautiful place. It's kind of like you're jumping back in like the 70s or 80s as far as just like the laid backness of things. The town itself is amazing. There's like two or three colleges on the island itself, so everyone is extremely like educated. There's a lot of people just doing a lot of different things. Like, as you can imagine, a place like that, just so far away from the United States, so far away from, some of these other larger hubs. I think it's like 4 or 5 hours from Rio. But it's just like this really happening place that not a lot of people know about. It's unbelievably beautiful. Again, people are working on some sort of endeavor, whether it's like within music, within school. They're trying to be a professor. They're trying to be a scientist. There's just a lot of stuff going on. And me being with my best friends down there and studying and living, again, was just a really impactful experience, that really just opened my eye up, especially about geography of like where you can live and the types of things that you can be doing and enjoying. So I think that really ultimately led me to San Diego to some extent, is that this kind of tropical, paradise kind of place where there's a lot still happening. So there's a lot of business and a lot of commerce that's going on within a place that's, gorgeous as far as weather and geography. I think pushed me once I graduated from Cincinnati, ultimately to come out west, get away from kind of the slower paced Midwest lifestyle, and just continue making connections, working with people that are inspiring me, and then and just diving into things that I really enjoy. Going back to your question of like, how'd you get to where you are? I think I interviewed for so many places when I came out here. And again, you have a relative amount of experience, right? Like I had a lot of study abroad experience. I got great grades in a great GPA in college. And yet I was interviewing with a ton of companies, and they were like, yeah, we love like what you're bringing to the table, but so-and-so, he's worked here, he's worked for 5 years. He has tangible experience, blah, blah. So I found some like contract jobs, provided value, here and there, all within like the e-com realm. Kept interviewing. Some of them were, just mutual disagreement of like, I didn't really want to do what, this company I was interviewing for. But I just took so many interviews to like try to figure out what the hell I wanted to do, what I wanted to work on. I needed to, make money, get off the ground, and try to establish myself in California. So ultimately came across Vincero, interviewed with the guys, very, very relatable founders, really relatable people. To be honest, reminded me like a lot of my older brother, who's like 7 years older than me, very like ecom, very driven person. Had a great, 2 hour conversation with our CEO, Tim. Told me, what they're trying to accomplish, where they're starting to see success from marketing. I told him that I can come in immediately and provide value. And that's what happened. And then kind of the rest was history. We've been going strong for 4 years now, and business is in a really interesting spot right now.
Hell yeah, man. Hell yeah. I love that you talked about the international aspect because, nowadays we don't really see kids going abroad or, even taking that extra step to get out of their hometown, home state. When you were in Singapore, you were assigned to these large brands. What were some of the key learnings that you learned and you've been able to utilize taking back to Vincero?
Yeah, for sure. So I'll tell you a funny story. So um, when the process of going to Singapore was that we worked with Cincinnati worked with a third party partner that tried to place students within companies that needed um, they needed someone to work in a specific position. So there was like they gave you a list of companies, you reviewed them, you're like, all right, I could see myself maybe working for 4 or 5 of these guys. They talked to them, gave them your resume, and then you tried to, basically pitch yourself via an interview to get the job. So I got a bunch of them. A lot of them were like very, very small. Like I didn't see, really me gaining a ton of value from them. And then there was one, and it was Possible, and it's a huge company. You should check them out. They're really interesting. They've got headquarters all over the place, but they were like, yeah, that we've got this opportunity with Possible, but the thing is, there's 500 applicants that are applying to this, so the likelihood of you getting it just because you've only been through your freshman year is pretty slim. I was like, well, I'm still gonna do it. Maybe I don't get the opportunity, but I'm not gonna interview it because my odds are low. So they gave you this prompt, and this one specifically because there were so many people that wanted the position. They gave you like a prompt. You were supposed to put together a PowerPoint, right? And say why they should choose you, why your background fits well with them. Like, just pitch yourself in the best light you can. And they gave you this format of doing it in a PDF form. And I was like, man, like given my background and lack of experience so far, like there's no way that I'm going to put something on a PowerPoint and it's going to surprise them and shock them to the point that they actually want to hire me. So I was like, if this is a long shot, I got to do something else that's going to stick out. So instead, like I mentioned when we were offline, like I make music. I've been making music for like 12 or so years, maybe even more now. I was like, all right, I'm going to put together a song and basically pitch
Let's go.
myself why they should take me. And little backstory, my dad actually built a studio in my bedroom growing up, just to help out with acoustics and just kind of play that fatherly figure of like trying to just support his kid's dream. So we had this booth set up, and I went and told him, I was like, yo, I got this interview, and I came back. So this was back in my house. I was in college. It was like over winter break or something like that, and I was like, all right. I told him the whole thing. I told him the backdrop of what I just mentioned to you. And I was like, all right, I'm just gonna make a song. He's like, what? What? Yeah, they're not gonna receive that well. Like, it's kind of a different culture. I rap, for instance, and it's like, he's like, I don't know how they're gonna receive that, blah, blah. So my best friend who I went to college with is my producer, sent me like a very like, mainstream type of beat, like very like acceptable and that kind of thing. Not any like hard 808s or anything. And my dad recorded me, and I wrote this song about like why they should choose me. I had this corny chorus and all this very corny song, but nonetheless, I sent that to the recruiter. I got accepted, and I was extremely excited about it. And then I think like a month into the internship, I finally got to meet the recruiter that said yes to my application, and it was at a happy hour after work, and we were having some drinks, and yeah, I was going through like hundreds of applications, and I stumbled across yours, and I listened to your song, and I immediately knew that we were gonna bring you in. I was like, man, that is like, it was just music, to my ears. Not to make a pun, but I was like, it was just a confirmation of the idea of, just stepping outside of the box, doing something that I felt very confident in doing, and then just giving my best shot of trying to portray myself in a light that is true to who I am. So it was just a really like reaffirming way of going about what I'm doing in my life, and a creative way to get across my thoughts and how I can bring value to a person or a company or a business. And back to your original question of saying like, how do those experiences help? It's like that type of thinking of, stepping outside of your box. And I think that's the biggest part of traveling for me. And that I always knew I wanted to get was getting out of my comfort zone. My town that I grew up in was very comfortable, very safe, middle range income, just your standard, like middle of the map, nice place to live. And I knew that I wanted to expand my horizon. So traveling, I can't think of anything else that's impacted me more than traveling specifically. Grades in school and all that, those are great, but I've learned, lifetimes more of knowledge traveling and meeting other people and other cultures and other ways of doing things, that have ultimately led me to places that I want to be in. And, San Diego is a beautiful place. These like micro steps of things happening start over a longer period of time have definitely started taking me to places in my head in the past that I wanted to, where I wanted to be. So, people who haven't been able to travel, I talked a lot with one of my homies that I traveled with a lot, and I was like, man, we feel, we were just talking about how we felt so bad that like these kids, if even if they wanted to have the experience of studying abroad during the pandemic, they just weren't able to get, as a byproduct of everything that was going on. So I hope those people will still have the idea to travel and to get that experience. And I hope the colleges are continuing to push it. But yeah, it's definitely unfortunate that they didn't. But on, my end of things, yeah, I couldn't be more grateful for the experiences that I had. And they definitely weren't easy. It took a lot of work. And like I had to work my ass off prior to Singapore to get the money to pay for it. Like there was grants and stuff and scholarships that I won by writing papers and stuff, but ultimately had to do like some very like hustling mentality stuff to make money to get to Singapore to be able to afford it. At the time, the price of the ticket, it was like $1,500, and I mean that sounded like 10 grand in my head at the time. So it's like these things over time they take a lot of effort, but ultimately it was a fun thing to do is travel across the world, expand my mind, work for someone else. Yeah, I couldn't push traveling anymore on anyone possible. Like especially like with the way technology is at this point in time, like people I think tend to stay in because they think that they know what's happening in these places because of the internet and because of social media. But it's just so much different when you spend a significant amount of time, with another culture and with another geography and that kind of thing. So, yeah, it's definitely expanded my horizons beyond belief.
What would you say, going into Vincero, were some of the biggest challenges, right, when you first started? Because was your first position always a growth manager, or has it evolved? Like, what were you first assigned at Vincero?
Yeah, I mean, it was definitely more like a growth specialist role. It was like singularly focused. We need you to scale this channel that we're having success in. They had some ideas around parameters that were making it work, right? They were starting to see success. It was like 60-second reads. We'll give them, these influencers, we're going to give them talking points as far as branding. We're going to give them a call to action. We're going to give them a promo code. We're going to give them a vanity URL. We're going to track that vanity URL. And we're going to track our conversions post performance. And then that's kind of how we scale things. If we're seeing the ROI that we need, let's figure out how we can build a cadence with this influencer that matches their growth trajectory, where we're hitting their audience in an optimal cadence to where ROI is backing out to where it needs to be. And we're at a frequency where, all right, we've got this influencer and we've got them locked in for a 6-month deal. We know, generally speaking, we're going to keep, tabs on performance, but we know what we're going to get out of this partnership. All right, Wes, so let's go get 15 more of these. Let's go stack 20 of these. And then eventually, we're looking at our budget and it's 10x what we were spending prior. The business is growing massively. We're driving way more traffic than we'd ever driven to the site, and for a more, a smaller CPA. And then so we just, beat the brakes out of the channel until we started seeing saturation within certain partners. And then we start kind of dialing back, figuring out the frequency, finding new opportunities within the space. And then we're like, all right, well, the evolution of that was we can definitely, as social media evolved and as the internet evolved, we can find more places where our audience is living. where are those places? So we had like these poignant, newsletters that we worked with. Morning Brew was a huge one that we worked with. Vincero, we were the first people to reach out to Morning Brew and actually advertise on Morning Brew. I'm sure listeners and people who listen to podcasts, everyone knows who Morning Brew is now. They're a media giant at this point. But when we reached out to them, they had 75, 100,000 subscribers. They weren't taking on advertising, and we were a partner of theirs for a year, 2 years, and they were massive for us. A business driven short snippet clip of what's happening in business directed to a 25 to 45-year-old. And there's a great ad placement of our product. There's some copy beneath it, a call to action, a promo code. It's very trackable because there's a UTM that's tagged onto it. So again, let's figure out frequency. Once we saw that our ROI was definitely backing out, let's go book these guys out for the year. Let's make sure we're measuring their growth, so we're not hitting the audience and retargeting too much. So it was just like these. I started finding these small wins within other channels. So it was like, once we found Morning Brew, it's like, all right, is there other newsletters that have a demo? Maybe it's not business, maybe it's technology, and maybe it's the Chive or something that's feeding content to men, and it's it's like sports and women and kind of pop culture-y stuff, but it's all men that are probably just graduating in their first couple years of their job. They have some disposable income. Let's hit those guys. Work with the Chive for a while. Ask Men, some of these other publications. Let's scale that to a point that makes sense until we kind of start seeing depleted opportunities. And then just kind of doing that over the course of my time is really like the growth strategy and like the growth marketing mix that I've developed over the last 4 years. So taking those learnings into podcasts, like previously, our founders didn't really think that podcasts would work that well because our product is so visually appealing that we couldn't imagine not being able to get our photography across in our ads. We would have to train ourselves and really train the audience of how to hear about our brand. So writing scripts over and over and over again, trying to figure out like, how can we introduce ourselves in a quick way that grabs your ear? How can you understand who we are in a quick way? How do you know what we sell? And then how can we give you an offer or an opportunity to access our brand? And how can we track that? Tracking it, obviously offline is much more difficult, but we started seeing so much success within these other channels is that we had the budget to be able to test this over a period of time and figure out our best way to track them, our best way to create audio forms of our brand. So just taking all these learnings from these channels, modifying them based on how the customer is experiencing what's happening within the channel. So, people are listening to your show, they're very engaged. Maybe they're listening, to something I'm saying, and then boom, you say, we're going to take a quick break. And then you hit them with a very direct ad that is, it's curated in a form that, someone listening is like, oh yeah, you know what? That actually sounds like a really interesting brand. If Yogin endorses it and he's wearing it and rocking it all the time, he's got a suit in the background that he's rocking his watch in. I should go check these guys out. I like Yogin's content. I'm going to jump over to Vincero's site, see what it's all about. So we start just figuring out how our customers are interacting with our ads and our branding. And you can just really just take this to these other media, spots and places that people are absorbing content. And then you just kind of figure out what works. You got to do a lot of testing. You got to finagle it. You got to figure out how to measure it. But that's ultimately created like a growth marketing mix that we currently have. And then back to your question is like, once I kind of built like this infrastructure, there's now an opportunity to, teach someone how to do the same thing and how to evaluate these opportunities. Because at the end of the day, you evaluate these things all in a very, very similar manner, right? Like there's an audience, what's the targeting of the audience? Who's hearing it? What's the price point? What's the estimated amount of impressions? What's the estimated amount of clicks? All right, those clicks are going to back into what we know is our conversion rate. Well, what's our conversion rate? Do the quick math. All right, does our estimated return, divided by the cost of the opportunity meet our ROAS goal? And then you can quickly evaluate something like that. You're not always going to estimate the opportunity correctly, but the more that you're doing it, the more you're into the numbers. you just got to win more than you lose. And that's just the name of the game. So that's how I'm trying to teach, our team now, to evaluating opportunities. And then a big thing that's also helped me in like a way that, negotiating is a big part of this, right? This partnership marketing is, one, you have to establish rapport. Next, you have to, get to a point where you guys are mutually trying to agree on a price point for a media opportunity. So what I've done and used and will always continue to use, and what I try to teach the team is that we always go in with a wish, want, walk attitude with like how we're approaching media. So every time I'm talking to someone, I'm coming in with our wish, our wish of price. If I had it my way, we're coming in with this price point. Our goal is to see success within this and work with, this partner for a long, long time. In the back of my mind, I know what I'm still willing to work with. So if they get back to me with a price, I have a fine line of I'm still continuing with the opportunity, or, I'm walking away from the opportunity. So having these things in front of you before you're making decisions and just doing a little bit of work before executing, it just goes a long way as far as like wins and losses within marketing, especially within partnership marketing, because you can't just turn it off. You spend 10 grand in a partnership marketing opportunity, it's gone. There's no turning it off like a Facebook ad or, programmatic ad. So you got to be dialed in. You got to feel confident in the way that you're evaluating the opportunity, and just teaching that to the team. So the evolution of, my role is definitely singular channel focus, multi-channel focus, and scaling multi-channels, and then passing off those channels, teaching them the ropes, and finding new business, development opportunities. So going into physical retail is something that I always thought would be important for the brand, because the product is so strong. Like the product, if you feel the product, if you see the price point, I guarantee that you're going to be pleasantly surprised by the design, by the materials, by the weight of it. And then you'll look at the price point and you'll just be shocked. Same thing with our eyewear. Our eyewear is in a place now where, we feel like it can compete with anything on the market, not just something in our price range. We feel that it can compete with anything above it as well. The materials we use, the way that we manufacture them, they're all very, very top notch. And my point in saying that is that we feel, like extremely confident in selling the product. So in doing that in physical retail, you can imagine just that experience that customers can have rather than telling them about it, right? Like all these ads that you see online is like, we're Vincero, come check out our product, but it's still an online business. You don't have a level of awareness or a level of trust. So building that trust is much easier in store, because you can, instead of feeding it to them, they can organically walk in, feel the product, see the price point, understand the brand in person, and then maybe go buy, purchase the product online, at another time. So getting into retail is huge for us. That's kind of my main focus right now. And then again, getting into physical form is developing our wholesale partner strategy. So we have some key partners on the wholesale front. We just started working with Nordstrom with both our eyewear and watches online. Goal of that being to get into physical retail here within the next 3 to 4 months. So that's like where my role is developing in trying to build out a wholesale strategy and a wholesale team, trying to make these stores profitable. Once they're profitable, we can take them into other markets. We know how to operate stores. You're expanding, you're scaling the business. So all of these things definitely stemmed from like a singular channel focus, which I think is important as like a young marketer, or as someone that's trying to get into marketing, is like, if you can market within one channel, you can take those learnings and market into any other channel. They're very synonymous in that way, because the initial thought process and psychology behind marketing is all very similar. The channels change, the way the content's being absorbed change, the functionalities of like the channel change. But as far as knowing your target audience, understanding how big they are, how they're interacting, like those things are all very similar. The negotiation part of things, as long as you have like these structures in place, you can, if you can scale one channel, you can definitely do it with others.
I want to go back a little for the listeners listening. Can you define growth marketing, partnership marketing? Because obviously it's not the same as media buying or email marketing, SMS marketing. It's kind of especially in the D2C community, it might be a fairly new concept, because media buying is just such a, prevalent thing. Could you define it and how you would?
Yeah, I think there's a lot of ways to define it. It's like when I came into growth marketing, it was like not as buzzy, as it is now. Everyone's like, everything is growth now. It seems to be like, all these companies are, raising massive amounts of money, and everyone just thinks like growth is everything, which it's important for sure, but it's definitely like convoluted. So I come from a sales background. My brother is a really solid salesman. He works for like one of the largest growing firm tech companies in the country right now, or fintech companies, sorry. They're an online mortgage lender called lower.com. So I grew up, I worked with his company at the younger stages of it, and a lot of it is like phone calls, right? And you're in sales driven. So my background is sales, and I think in my opinion, I think, a lot of people have different variations of this, but in my opinion, growth marketing is finding non-programmatic opportunities that drive ROI positives, they're ROI positive opportunities and drive sales forward. So some of that can be brand awareness in top funnel marketing for sure. But in my opinion, I think the goal of growth marketing is finding opportunities to drive sales for the business that are outside of, paid media buying. Because that's what it was when that's what it was when I came in. We had these, rigid, structured Facebook, Instagram, these other social media platforms. How else within like the world that we're living in online, how else can you drive sales for your business? So, a big part of that is influencer marketing and taking, someone who is a thought leader in the space and using the power of their voice to sell the product rather than your own ad on in a box with some copy underneath it. So it's a more fluid way to sell your product than the rigidness of an ad that's online. There's different forms of ads, but again, utilizing just like the human element of things and the voices that are around in the internet and trying to drive sales in that way. Like, I think some growth marketers might, say driving, site traffic or more top funnel awareness. My strict goal and that's just an honest goal too. I think some people might be afraid to say like driving sales I feel like sometimes that can have a negative connotation for some reason, but my goal is to drive sales for the business and find new sales revenue streams that'll push the business forward. Like we need money to, move the company forward. How can we do it in a way that's aligned with our brand that is meeting our ROAS goals? So without being too long-winded, to me, growth marketing is finding opportunities outside of programmatic advertising that are authentic to the brand that drive sales.
I like that. Yeah, I like that. What have you noticed at Vincero have been your biggest drivers? I know you mentioned podcasts, influencers, as well as newsletters. I mean, can you talk about the impact of some of those, and then overall maybe like break it up into like a pie chart?
Yeah. So coming in again, singularly channeled, it was on the growth side specifically. I'm just going to speak from growth. And if we want to get into a bigger pie chart of like overall marketing mix, we can do that. So on the growth side, singularly channeled starting, it was 100% YouTube. Again, as the world changes, as things evolve, and as we market, you start saturating the market to a certain extent. So you need to find other opportunities. So that went into newsletters. The scale within newsletters isn't quite, it's not as big as like a YouTube. It's not as big as Instagram influencer partnership. It's just not. But finding those opportunities, maxing out the channel, and then just figuring out what our ongoing strategy within the channel is how we develop this kind of marketing. So early on, it was like for the first year or so, it was like 80 to 90% of growth marketing was in YouTube. As time went on, the channel developed, got more competitive as well. So as early advertiser, we were having, a field day as far as we could work with anyone we wanted. We were getting the pricing that we wanted from anyone. And we were hitting, we were far, far, far exceeding any, of our goals on the return side. But as it got more competitive, rates increased. bigger brands, and we're seeing this even like we're seeing this happen right now within like bigger brands on Facebook even, right? Like they were so focused on their retail presence that, D2C brands were having arbitrage opportunity within Facebook. And now, that was happening within YouTube. So we were younger brands ourselves, and there's a handful of other D2C brands were crushing it on YouTube. And then bigger brands are like, oh shit, we got to get into this. They started marketing. It got more competitive, especially on the women's side, because there were so many large like beauty brands that were just tossing, cash at these women influencers. And we're like, all right, well, we can't just start taking a lower return and just call it quits. So we had to move into other channels. So moving into podcasts was huge because it was kind of like that early stage as well. I would say we were maybe like a year later than I would have preferred to be on the podcast front. It's still early on, but people were having a ton of arbitrage a year prior to us. But we were having so much success with YouTube, we just didn't, we didn't want to move into another channel and just risk hurting performance. So we moved into podcasts. We treaded very lightly, like the first 6 months. 6 months, it started catching on, started marketing hard over the next, until now. So I would say from that point on, it was more like 60% was going into YouTube, 20% was going into podcasts, and then there was just kind of some smaller media newsletter opportunities floating in the ether there. And then from there, we got into scaled affiliate pretty quickly. But again, there's still a ceiling there to some extent with what you can do with publications on a commission-based system. So that's again a large portion of our media, but there's not a ton of activating that we can do other than just try to continue our relationships with bigger media publications. So like if I look at our mix now, we don't market at all really on YouTube anymore, which is interesting, but it's just kind of the way that things worked out. The channel is not as engaging, and within our space specifically, like the men's lifestyle fashion business, it's not huge. It's like it's way more developed and growing on the podcast front. Hence why you're doing a podcast and not a YouTube. Not to say YouTube's dead. I think probably I'm sure you've considered moving this into YouTube and being multi-platform, because your visibility is just better. So it makes sense. But as far as like growing channel within our space, I think it just kind of, dwindled. We see a lot of the people that we worked with prior, their viewership's just not what it once was. So we just shifted, and that's what, we have to do as marketers to be nimble and to make sure that we're not stagnant and we're not losing out on opportunities. So now I would say like 5% of our spend is probably in YouTube. Probably like 35, 40% or so into podcasts. Drop-ins we do a ton of, like we did with you guys and with Snow. It's really developed. It's really like a quarter to quarter thing now, is like where are things trending and where are the opportunities. We're much more, just because the landscape's more difficult as far as like D2C marketing and what we're doing, we're more direct as far as when we're marketing. So more like seasonal. And we do a lot of direct mail, which is something that I also didn't mention. We did 4 direct mail catalogs last year, which was awesome. We somewhere like Father's Day, we do like 200,000. Holidays, we do close to like 300,000 homes for a direct mail catalog. So that actually has been a huge channel for us as well. So I would say it's a floating pie chart because of things like that. Like direct mail, we're not doing on an ongoing basis, but when we do this, it's a very, very substantial part of our budget for that, month or two that it's kind of going off. So it's just really diverse at this point. I wouldn't say there's a channel that's leading one or the other right now. I think the benefit in a place that I always wanted to get Vincero in was that I wanted to establish like a foundation of understanding within all of these channels, so we can plug and play where we see fit based on what the brand is doing. So for instance, we have a new watch coming out. It's called the Argo. It's a dive watch, $395 dive watch, beautiful watch. We've been working on it for 2 years. We have a launch coming up in March, and we're kind of coming up and working on our strategy for that. So we haven't been working within YouTube a ton, but we have so many established relationships with YouTube influencers that are familiar with the brand that we want to give the product to to get, to reach back out to their audience about us. It's a retargeting play, because we know that audience is purchased from us, that, it kind of brings that channel back into the realm of our marketing. So it's very fluid at this point. And it's just, it's so much more competitive than it once was, that a lot of brands, and I talk to a lot of other like growth marketers within the space, they're not quite as singularly focused just because of that competitive aspect. It's more so scaling where you can within this kind of diverse marketing mix that now is growth marketing. At one point, it wasn't quite as like, there weren't so many channels that people were getting into. And it's like digitally native brands are getting into kind of some older marketing things, such as TV and catalog. Like we tested TV out last year as well. Very, very interesting and promising channel for us. So it's just kind of like this reevaluation, I think, of the entire marketing mix that's happening right now, even on the programmatic side of how we're looking at programmatic ads, and maybe potentially thinking that growth marketing and this type of marketing could be more fruitful because you can be a bit more agile and tactical with your just with how you spend and just how you operate. There's just more avenues. Whereas if you're getting boxed out on Facebook from a CPM perspective, and your CPAs just keep rising, there's not a ton you can do. So I think growth marketing, I think that's why people are talking about it so much, is more important now than it probably ever has been, because growth marketing is just finding new, sales channels. Like I was going back to, is like, you need to find new sales channels. And if you have a growth marketer that has experience in doing that, then they can go and, figure out this landscape and be like, all right, here's arbitrage here from a cost perspective. Maybe it's a weird channel that doesn't necessarily seem like it should be a D2C brand, but we know how to market now because we've had success on channels. We can take it to this channel. We can go to TV. We can evaluate things like we're evaluating YouTube. We can take the influencer aspect and the voice and thought leadership to a TV ad and kind of take what we know into a new channel for us, old channel, marketing in terms of marketing. So it's just it's a very interesting place, and I'm sure you for sure know that as far as like your experience with snow. But I think the agileness of things, especially with a medium-sized brand like Vincero, is more important, and having that level of understanding with all these channels is probably more important than anything at this stage, because things are so rapidly changing, especially given the environment that we're all in from an economical and like socio-economical standpoint. It's a very agile, like just very precarious space that we're in as like an economy, and like even as a country and potentially as a globe of just things are very strange, like we're all like adapting to it. And I think D2C brands, everyone had a different experience, but we got a shock to the system as far as the pandemic, and we need to ultimately just be way better at what we do. We can't rely on, just D2C programmatic ads being a place where you can grow your business forever. It's just not where we're at. It's not going to happen. You need to be better marketers, need to, work more on branding. We need to be more customer involved. Cause when you're pricing, when you get boxed out on pricing, it starts showing you how much more important your current customers are. We have, a customer base close to, 500,000 at this point, and the importance in how you treat them is going to be how your business is sustainable in the long term. Because if you don't have those opportunities from a cost perspective, or something like COVID is happening, a lot of people rely on their customers to continue to support them through that. So having that line of communication and opportunity to speak with them and have a level of understanding is probably my favorite part about, the new business models that are out there. Is like, we all understand, and we all, younger people, this younger generation, we want to purchase from like real people. We want to have like those touch points that are realistic, and the opportunities are there. So now that the opportunities are there, there's a level of expectation as well. Like, if you're buying from an old brand, or you have an experience from a stagnant old brand, you're not getting an experience like you're going to get with Vincero. You're not going to get like this boutique-esque style customer treatment, both pre-purchase and post-purchase, that you're going to get. So I just think it's an interesting space, but all of the environmental factors are leading to everyone needing to be better at what they do. especially from the marketing side. So not relying on, just old tricks, to people who are listening of like, this worked in the past, so it's going to work again. It's just not something it's not a sustainable thought pattern.
Can you highlight some of these like channels and some of the specific campaigns, right? For example, on YouTube, were you guys primarily going into influencers as affiliates, or were you going in as sponsored integrations? How much were you spending, and what was that ROAS looking like, right? And not even just YouTube, but as well as podcasts and newsletters. If there's any specific wins that you can kind of go deeper into, I think it would give like people more of an idea of what this space looks like overall.
Yeah, for sure. Happy to dive into a couple examples. So again, in the YouTube front, it's a great example of just marketing because it's just the way the platform is. It's a great way to think about the start of a partnership to the completion of it. So in the early stages, we were fully sponsoring these guys, right? And women. We weren't working with them in an affiliate basis. We didn't even have an affiliate program when we were when we first started in YouTube and when I first joined Vincero. So a couple specific huge wins for us. So there's a group on YouTube called Menfluential, and they're a conglomerate of men's lifestyle, men's fashion advice, and it even goes into like life advice and coaching and just like how to well groom yourself as a young man or as a growing man into this world. How do you communicate? How do you dress? What do you communicate when you dress? Which is obviously perfect for us, right? It was actually a partnership that was struck before I got to Vincero. So they just kind of wanted me to pour fuel on the fire with this partnership specifically. So there's a couple guys in there. Jose Zuniga is one of them. He has a show called Teaching Men's Fashion. And then Aaron Moreno has another show that's huge. And we work with these guys again on a paid sponsorship basis. So starting at like point one of, never working together, we, again, evaluation process. All right, these are the channels that you guys have. This is the audience that you have. And I'll go into how we're evaluating them. So looking at Jose's channel, we would look at his top 10, or his latest 10 videos, and we would average those out. So we would get on average, Teaching Men's Fashion, his show, he's seeing 350,000 views per show that he does. And so that's right there. That's our impressions. We're expecting to pay for 350,000 impressions. So from that standpoint, we start to get an idea of value, right? And once we strike the partnership, the things that we're starting to think of are how are customers getting from his show to our site? All right, well, in YouTube, you're able to place a link in the description. We're able to track that link via UTM. So in the beginning, you don't know how people are going to click, right? You're getting 350,000 impressions, but you don't know how many people are going to click. But we knew the value was there at the time. The cost was very affordable. So we weren't scared of testing it out. So we wanted to get in front of as many people as possible. We had the idea that pre-roll, people might just skip over it. So pre-roll being before the video starts, doing some sort of ad placement. We wanted them to get in their video so their customer or their audience is already engaged into what he's talking about content wise. From there, again, we provide them a script, talking points, very like loose, right? Like we want it to be conversational. We want it to be organic. We don't want it to feel like a QVC ad and we're just pushing our widgets. We want it to feel authentic, and it's easy to do given the alignment and context of his content. He's telling you how to dress. Oh, this jacket goes perfect with this watch. By the way, I've been working with Vincero watches. They sell amazing products for a very affordable price point. Go check them out on the link below. Use my code Jose20 or whatever to get, a discount. Really love these guys. I think you guys will help. It'll help you guys elevate your game, et cetera, et cetera. Click on the link, go to the site. We can obviously measure the clicks from there. Now we start getting an understanding of YouTube, not just site conversion rate, but YouTube conversion rate. What is the conversion of the audience that's coming from YouTube? So once you start getting that data from one channel, you can take that information into the following channel, and that's how we just start stacking things up. So As far as like ROAS in the beginning stages, we were getting, anywhere from like 5 to 10x, right? Like on our spin. So this this is where the scaling was happening. And again, there's few places that you can do that now. It's just so competitive. Prices are where they are. So ROAS, they fluctuate a ton, but at that time, that's kind of the return that we were seeing from those channels for the course of over a year and a half, 2 years. So that's why it was such a focus of mine and why I was initially brought in, is because the guys, the founders and small team at the time, they're like, we got to have someone that's just hammering this home and growing it and scaling it. So that's exactly what I did, and the what I've been touching on. Going into other stuff again, like the Morning Brew campaign is looking at the same things. Before getting into the partnership, they need to send us their send size. So how big is the list that they're sending it to? What's the open rate of the newsletter? What is your guys' average click-through rate, both on your segment of the article as well as the ad segment? At that point in the partnership, there wasn't an ad segment, so they couldn't give me those numbers, but they could give me the click-through rate to whatever other topics that they were talking about. Again, just do the math, figure out where your conversion rate backs out to the ROAS that you want to get from the partnership. Everyone's product and COGS are different, so your ROAS targets are going to be different. Your business goals are going to be different. But again, going back to this opportunity, we paid, I don't know, 4 or 5 grand, I think, for like their first newsletter. And, we made 25 or we made 30 or something like that. So again, all right, this is working. How can we find more of these opportunities? They were scaling too. So it was a perfect partnership. And we've done this over the course of our time. Is like, we found these guys that were growing. If you can find a channel or an audience or something early on that's growing, and you get them you have a great relationship with them, you get them at a good price point where you already have data gathered. So if they do increase their rates, you still know where you lie to be successful, so you can continue growing with them. So Morning Brew was growing tremendously. Our rates with them were growing as well, but it was sustainable because their audience worked. We had the data to back it up. So we struck 4 to 5 to 6 more partnerships with them over the course of the 2 years that we were working with them. And again, I mean, as they grew, we were paying 15 to get 45, and then we paid, 18 to make, 50. And that's just kind of where we were at with them. And that's where the marketing mix part of it is important, though, as like someone who's trying to be tangible and be smart within their marketing mix. Is like, you might have a guy or a partnership or a few that are going 10x, or maybe not. Maybe it's even like 3 or 4x. And you might have someone that's a 1.5, but they have massive scale. So it's really bringing all of these things in to hitting some sort of top line revenue number that you want to get to. Say you have a month-to-month goal of top line, and then you can kind of bring all these channels together and all the estimated returns, and you can hit your top line, number as well as your ROAS target. And that's really like the marketing mix, and like how I've built what we do within growth marketing. Is like, all right, we're communicating with the founders of what are our top line goals for the year, quarter, month to month, and then how is growth going to contribute to that monthly calendar. All right, well, we need to make 400 grand this month based on the opportunities that are in front of me. How are we going to do that? I know this channel, I feel very confident that I could spend 80 grand, 100 grand in this channel and get this ROAS. This channel, we have minute success. We can only spend 20 grand in it, and we're getting like a 2x, but we're building that top line, and we're still able to be profitable within this channel. So doing that all together will get us to this top line goal. And again, all the estimating and all the projecting is just so important. Again, you're not going to hit it all. You're not going to hit your numbers all the time, but if you're doing your calculations, if you're doing the pre-work to these partnerships, if you're monitoring performance ongoingly, you're gonna land there. You're gonna get there. It may not be in a month, but if you do that over the course of a quarter, you look back and you're like, man, we spent a ton of money in a ton of channels. We were we were on top of 3 of the 4 channels. 1 channel kind of flopped. We didn't get the engagement that we wanted, but we're here. We're hitting our top line goals. We're really close in ROAS, or we're exceeding it. And that's just kind of how we operate. That's how I've operated this business for as long as I've been here. Yeah, I guess I don't know if that answers your
No,
question, but
no, it definitely does. That was some of the stuff we were doing at Snow as well. Was with podcasting, we never fully found a winning channel or winning segment.
yeah,
We found a few podcasts that worked really well, and we found a niche, but we weren't able to scale it to the moon. And I think with partnership marketing, that's where it becomes complicated. Is like finding those segments and then being able to scale it. And
yeah,
sometimes there's not enough inventory, and I think that's what you talked about is constantly have to be looking at other channels, from video, newsletter, paid, brand to brand, retail, wholesale.
yeah,
Let's talk about some of the setbacks, right?
for sure.
We know that there's not enough, or we know that there are a lot of moments where we kind of fall back on those partnerships. We expect a huge return, and it's just $100,000 wasted, or we pay a celebrity $50,000 for an endorsement and it just doesn't pan out.
Mhm.
What have you guys done and what have you seen?
For sure. And I think you just touched on one of them. And I think it's the hardest thing psychologically with as like a marketer is what you were just saying is like in YouTube, we scaled it so well. We had such a strong, strong performance there. It's so easy to go back to them, right? Even though you're not going to get the 3 or the 4 that you wanted. Maybe you'll get a 2, but it might be fully like, 70% retargeting. So we've definitely gone across, and I'll touch on podcasts as well, but on the YouTube front, we've gone back to the well, say for like a sale or some sort of seasonality thing, and overspent, way overspent. And maybe from the direct ROAS, we couldn't tell, but from a monthly scope of where the business was, we could tell we overspent somewhere. And where the gray area is always in growth because it's hard. Everything's so kind of hard to track. Is that we looked back at YouTube and we're like, we spent a lot. Our ROAS was decent, but then as we start diving into it, we're like, we hit these channels for 3 years, and we're not seeing tons of performance. So our thought is, I'm assuming we're correct, is that it was just a ton of retargeting that those people, a large portion of those people would have purchased without the advertising that we did within those channels. So I think that's an ongoing it's an ongoing problem that you should always think about in your head when things are working well. So we've done that a couple times for sure, and it's ruined a month or it's ruined a sale, and you gotta move forward and realize that you can easily saturate a channel. And like you were saying with podcasts, like if you're only finding success within your niche, then it's okay to be somewhat complacent with that. Like I think you should go more broad and do some testing to see if there's opportunity with a different segment. But if you do that and you fail and you fail and you fail, you got to just take your L, stay with your niche, market them to a frequency that's optimal, and then find another channel that works for you. And we have done the same thing and are, I would say, currently weeding ourselves out of that. Like we've scaled a bunch within talk show podcasts and like in business and like conservative like radio talk works extremely well. People are going there, they've got their guy they listen to, they listen to anything that they say, they endorse our product, it performs tremendously well. But we've tested sports podcasts and seen very minimal success. We've tested like pop culture, no success at all within pop culture. And it's just, I think it's more of a general thing as far as the content goes, and they're not necessarily going for that person. They're going for the conversation that they may be having or the specific topic they might be talking about. Whereas someone like your podcast, I'm like, yo, I really fuck with Yogin. Almost called you Rogan. I really fuck with Yogin. I'm going because I want to hear what he has to say. Like his opinion matters to me. That's where we've seen success within podcasts. And going back to your point of like failure is like you can easily fail to realize that. And what is always difficult within a specific channel is you can have success and your total ROAS can look good from a channel perspective because of your winners. But then you start pulling these winners out, right? And you start looking at your spend and your ROAS with these tests or guys that you kind of have in there because they work or they they're like aligned from a branding perspective, you're like, oh shit, we just wasted 25 grand and we're not making anything from these guys. So we've definitely done that. It's just being cognizant of it and minimizing it. You always want to test, you always want to figure out where you can potentially scale something, or, if there is a new show and that comes out and it's catching fire and you think there might be an alignment, and you want to test those things, but it's just having like that layer of uh understanding that you need to step back, and maybe the way that you're looking at your marketing mix isn't always directly what's happening. And like I said, you need to pull those winners out sometimes to realize your ROAS could be you could 2x your ROAS. And now it's different if you have top line goals you need to hit. So that's one thing. But if you're going at it just from a pure profit standpoint and return standpoint, and you pull those guys out, you're like, man, I could have 4x this month if I wouldn't have wasted all this money in, whatever topic that's not working. So pulling those out is tough. And it's really about the setup with all of this stuff. Like, how are you setting up like your daily practices and like your reports? Is it like a clear picture? Like, we're constantly reevaluating like even our, going down to like our sheets that we're reporting on. Like, if you can easily just get in this repetitive motion of like, I'm plugging in our campaigns, this is the return and this is the output, and you're not really necessarily looking at the bigger scope. So you need to step back. Like, if it's tough as someone who's booking and doing all of the hard work, if you're doing that on your own, which a lot of growth marketing people are, because people need to be efficient with their budgets, is that you also need to, step back, take the 30,000-foot view, and make sure what you're looking at on a day-to-day, week-to-week basis is actually what you need to be looking at from a monthly and quarterly basis, and you're actually contributing in the right places. Another example is like early on, we did like a FanDuel partnership back in the day. FanDuel, it was like when they just started getting popping, and we sponsored like 3 or 4 golf tournaments. We thought, the math was there. We thought we were going to get the impressions and clicks that we got. At the time, I think we spent like 40 grand, which was a lot. This was like 4 years ago. And we spent 40 grand on a partnership, and we saw like a 0.6 or 7, didn't hit our ROAS goals at all. Again, now at the time that was like, holy shit, we just spent, a C-class Mercedes on this partnership, and we didn't make any money off of it. So it's just, it's really specific to business needs and how you look at it, but just making sure that you pull back your head every now and then, and have opportunities to reevaluate what you're actually looking at. Because it's easy to get bogged down, especially with partnership marketing, where there's so many. You have 40, 50, 60 partnerships going on in 1 month. Like, you're just happy if you get them booked, you get the price you want, and the content goes off, let alone pulling your head out of it and being able to analyze it from a strategical, perspective.
Something I want to touch on, which you just said, is KPIs, right? If a brand wants to get into partnership marketing and start experimenting, what have you noticed is the best way to attribute sales, right? Whether you're doing podcasting, which you heavily rely on discount codes, but you also have to look at the overall lift on media buying, right? And what you're seeing, if you're running a lot of paid traffic that day, and then you also have a podcast, what's the overall, trend? Let's talk about that. And then I also want to talk about, overall your department as a whole. When you're looking at a different brand, how do the executive team measure the performance from your division, right? And this might be something, just talk about overall for a lot of DTC brands that haven't considered partnership marketing as a viable channel to put a lot of their efforts in. So yeah, let's talk about that as far as KPIs and attribution.
Yeah. So attribution, do you want to get into a specific channel or just like a general way to attribute sales?
Yeah, let's do a specific channel, for example, podcasting, radio, and maybe even out of home. I'm not sure if you guys have done that. And then let's just go into general after that.
Okay, cool. So on the podcast front, that was our biggest concern going into the channel, is how are we going to measure this, and how are we going to measure it confidently? Because even if we're doing well, we won't know it and we won't be able to scale it. So I would say it's definitely still like a pain point and something that is very artful, more so than scientific. So early on, and we still do this to some extent, the CTA is backslash, for instance, we work with Tony Kornheiser. Go visit Vincero at, vincerocollective.com /Tony. Visit their site and use my promo code Tony or something like that. And we look at it from a very like triangular standpoint as far as performance goes. So that's developed. Before that, we didn't have a post-purchase survey, which is crazy to think now, but maybe we had it, but we didn't look at it at all. And it wasn't like, it wasn't optimized for response rate and that kind of thing. So we, in the beginning stages, we just looked at full impact clicks. So we work with a third party company called Wicked Reports. They give you full impact, which allows us, to get those, be able to see those views outside of, what GA would potentially report. So we looked into click data and revenue through Wicked, our third party partner. We looked at promo code usage, and then again, at the time, we didn't look at post-purchase survey. So we really relied on just those two factors, which I think we probably cut out a lot of partners that probably worked, that we just didn't see the traction on because we weren't looking at the full scope of things. Now that we've gotten further into it, and that we've scaled decently within the channel, we rely almost solely on our post-purchase survey. So we rely really heavily on our response rate on our post-purchase survey being high, so we can reliably put some sort of multiplier on our data that we're receiving on our post-purchase to attribute back to these shows. So in our post-purchase survey, we'll see, anywhere from like 35 to 55% response rate. And to this point, we've been very conservative with the multiplier that we'll put. So again, trying to give context for listeners is that, if someone listens to Tony Kornheiser, they go to our site, they check out, they're prompted with a survey. Where did you hear about us? They type, or there's a box that says podcast, and then there's an open answered follow-up, 2-step question that says, what show did you hear us on? Tony Kornheiser. We get that data in the back end on a weekly and monthly basis. We evaluate that. Say 10 people, responded Tony Kornheiser. We look at our response rate for the month. We take that into consideration, but we just put a 2x multiplier that's actually beneath what the multiplier would be to get us to a full 100%. We're changing the way that we're looking at that now and being less conservative because we in the past have felt the lift of these podcast channels more. So what we want to do and test out more is being more true to our response rate. There's a slight chance we over report, but just from a business standpoint, I think we want to get more aggressive as to how we're evaluating this stuff. So we're going with a true multiplier. So if we have a 50% 50% response rate, we would simply double it. But if we're beneath that, we would do the math and maybe it would be like a 2.5x on our responses. That, and in addition to starting a partnership with someone like Podsights or Chartable. So for context, again, to the audience is, these are like the two primary technology leaders within podcast attribution. They pixel your site. They take the RSS feed and the downloads of the shows so if someone's listening to Breaking It Down, they download the podcast. They listen to our ad read. They, go through some sort of, funnel and journey to our site, purchase, a Vincero watch. They ultimately will get, attributed back to their platform as to how the podcast is performing. We tested out both of these platforms when they first got started, and we didn't believe and trust the technology. It just wasn't developed enough there. There was a lot of over attributing happening. Their dashboards and things were very convoluted and just not pretty. So we didn't work with them for a while, and we've solely relied on post-purchase, which I think is a very fair way to evaluate podcasts. Like, I think people shy away from it just because it is artful and there's a level of trust there. But again, going back to looking at your 40 or 30,000 foot view, if you're doing this kind of artful attribution and you're looking at your monthly numbers and there's things that are off, that's when in a marketer's head, you should go back and think about how your attribution models are set up within all these channels. On the growth side, it's probably the biggest pain point. And I'm sure, you know that is like we're always constantly making sure that we're attributing things right because we don't want to overspend on anything. We want to be as efficient as possible. But there's so much overlap between what we're doing. If someone hears a Tony Kornheiser podcast, tons of times they'll go on to Facebook and get a retargeting ad and convert through there. So inherently there's overlap, and we build that, into our blended models at the end of the month. But again, post purchase is great. Going back to the technology platforms, they seem to have their shit together now, and they seem to be much more accurate and just developed as far as technology goes. So we're actually starting to work with pod sites again. We're doing a test over the first quarter, getting a better understanding of their dashboard, in hopes that it is more accurate. We can see a further, a more developed journey that they're taking, and we can ultimately, the goal is to spend more within the channel. So that's how we're looking at podcasts. That's what we've done in the past. That's how we're, evaluating them now. As far as like out of home, we don't have a ton of experience in it, but we did test TV, like I had mentioned prior, which, we had to figure out our attribution model there. So we relied heavily again on post purchase, but our agency, they do lift analysis on all of our spots that go off in TV. So they've got it down pretty well, I would say. Any time that an agency or a platform is doing attribution for you, you should always, have your own, ecosystem of how you're going to do it on your side. So you can compare the two, make sure you're looking at it. If you can trust the platform, that's great, just because it's easier and less lift on your side. But again, you should always have your internal attribution first, and then secondary, if they have some sort of platform built, use that as a frame of reference as well. But what our agency did is that they did a lift analysis on our site visits and conversions over time. So again, Pixeled our site. They take a baseline of what's happening minute by minute on our site. So they have a baseline of sessions that's currently happening. They have a baseline of conversions that are happening. So when a ad spot goes off on TV, the ad spot will go off, and then they have a window and a gap of time. Can't remember if it's like 7 days, or it might even be shorter than that, or they might have some increments, maybe a few hours a day, 7 days a month, etc. But we really want to look at that initial lift, especially as direct response driven marketers, is like, once that ad goes off, how much is our site traffic increase, and what are the conversions that we're getting from that? And that's how we attributed it. We use our post purchase survey as well to kind of like back up some of what they were seeing. In our opinion, it was very, very accurate as far as what we were seeing. In the channel itself, like I said, when we first started talking, is very promising for our brand. Again, very visual. You can get the thought leader. Our spot was like a founder spot, 30-second, 60-second founder spot. But just great way to market and legitimize your brand. But that's how we're measuring out of home, and I think that's how most people at this point are evaluating out of home. There's Rockerbox, there's Northbeam, there's these other platforms that are trying to help out with some of these iOS retargeting issues, which we use Northbeam. They give us some good data that kind of helps our entire ecosystem. But again, post purchase is, if your response rate is there and you're prompting your customers properly, you can get a lot of reliable data from them that can help with attribution.
I like that.
But I'll pause there before going into your second question, just to make sure I'm not stumbling over anything.
I did want to touch on brand and brand partnerships as well, because I know that was something that we both did collectively between Vincero and Snow. And that was also another focus of ours at Snow, was doing email slots, insert slots, and stuff like that. Want to get an idea of, are you guys still doing that? How much of an impact is that still having? And what have been some of the biggest brands that you've had the most success with?
Yeah. So just full context with the audience. So Yogin and I, we work together at Snow, and what we did is we provided each other gift cards with an offer in both of our e-commerce packages. We presented a number of packages that we wanted to insert. I can't remember if we did like 15, 20, or 25,000 or so. But the great part about it, and the great part about, brand partnerships, is that there's no ad cost, right? You're paying for and utilizing one another's assets. So in this instance, we paid, both of our costs were incurred via printing these cards. That was the only cost that we were incurring. Maybe a pick and pack fee in the in the warehouse, maybe not, depending on how your warehouse is set up. So we exchanged gift cards essentially and provided an offer to one another's products. We weren't competing brands. We had a similar audience. Your audience cares about their appearance, how they're looking, their presentation. Obviously, fashion watches go perfectly in that. Same thing, vice versa. So great idea for a partnership. Both very aligned audiences. And the customers are getting a great offer, right? We provide and have provided some of our best offers within this physical form, because the LTV is there, and that we don't get a physical presence a ton with our audience because we're not in retail at the time, and we don't have a omni-channel presence. Is that at least there's something physical that is intangible that your customers could see of our brand, go visit our site, and it's extremely trackable. Again, another benefit of this type of partnership is that you're almost guaranteeing the impression, right? Whereas in most other media, sites, you're pitched an average, you get below most of the time, you're under delivered, and you're just missing out on some of what you calculated. In this instance, someone's opening up, a teeth whitening kit. They're gonna see the gift card. Whether they choose to use it or not is obviously up to them. But because we're not incurring any ad costs, it's a very, very lucrative channel for us. Whether it booms and everyone, the conversion rate's crazy or not, like your margin for error is so small because of the little amount of ads. And I think that's why this type of partnership marketing is a very interesting and very trending topic right now that I think people are trying to figure out. So I think us seeing this early on is definitely, and I can touch on some other things that we're thinking and working on, but partnership marketing is huge for that very reason. I'm trying to think, going back to your other question, rather than just explaining the partnership. What was the initial question regarding partnership marketing?
It was really just about, overall brand partnerships, and if you guys are still seeing an impact within that channel.
Gotcha. Yeah. Yeah. So yeah, we do drop-ins monthly, quarterly, yearly basis. Specifically that type of brand partnership. We do email swaps. We haven't done one for a while. So touching on, I think, you asked about some other wins and other brands that worked really well. So we worked with Charles Tierwit. They're a UK-based fashion brand that creates formal wear. They have suits, jackets, button-ups, collared shirts, that kind of thing. Perfect audience. Even I would say an incremental audience because they're probably a little bit older. They're also international. So just getting into new eyeballs. And also on their end, our customers love, fashion, good products. They make, wonderful products. That performs very well from a drop-in perspective. We work with Exter Wallets, another international brand, great partner of ours, great friends of ours, wonderful to work with. Again, audience alignment is great. And then we work with a lot of broader. So we worked with GoPuff. We work with a cigar box. Just trying to find, again, in the scope of thinking of audience, what are other brands that have our audience that are non-competitive that we can have a mutual swap with and both provide our customers with value, because there's also another value on the other end, right? You're providing your customers with $50 to a brand that you guys also believe in. We wouldn't have worked with you guys if we didn't like the product, didn't like the brand. We wouldn't have done that from a branding perspective. So our customers are always getting 2 gift cards from us in a very nice package. It's it says a gift from Vincero. Maybe it's wine, maybe it's a suit, maybe it's boots, something like that. And I think going back to the full partnership marketing, it's a beautiful place to exist. It's difficult because you have to pitch an idea that maybe a brand's not doing. And I think I pitched you on it or something. And it's a tough ask, especially if you've never done it before. A lot of hesitancy is that, your customers won't like it. They'll think it's ad-like. There's warehouse costs. There's logistical things that are an additional layer. So there's some lift with it, but ultimately it's very fruitful. Some other stuff that's happening on the brand partnership side of things is more um, platform and site driven, where you can do the same thing on your site, right? You can, if it's an aligned brand and the experience is strong enough, you can sell another brand's product on your site, and have a very cohesive and not confuse your customers too much, and have a good experience. And it's a way for you to continue your expansion of what your customers are receiving from you, grow your sales, and again, the costs are very minimal. They have a lot of platforms now where it's a Shopify plugin. The product ships from we're not doing this currently, but I think there's interesting things about it is that you can plug in a product, plug in snow on our site, sell it on our site, ship from your warehouse. We're commissioned off of it, basically like an old school consignment in an old school consignment fashion. You guys get 70%, we get 30, whatever you agree upon. And it's a way for us to continue our offerings for our customers, create a unique opportunity. And that's why there's a lot of these marketplaces that are coming up. Like, I'm not sure how familiar, you are with them, but there's like Very Shop is a marketplace that's popped up over the last year and a half or two. And they raised a ton of money. They're a huge platform now. They have tons of products on there. We're on there. There's a lot of other really cool D2C brands. And it's again, the partnership aspect. They don't have any hard goods, right? They have a platform. They're outsourcing tons of, partnerships with them. They're saying, we're going to host your product on your site. We're going to take 20%. We're going to market your product, all the programmatic channels, etc. We're going to host you in our newsletter, that kind of thing. And, as long as they're on brand, the customer experience is strong, and they're not competing with us advertising in our advertising, especially within search, then it's a net win for the brand. So there's a lot of that's happening right now that I think is really interesting. And it makes sense. It's a combativeness to the rising CPMs that's happening within programmatic. So going back to what we were saying about being like a marketer at heart and finding these new opportunities, need to realize these things and figure out where people are finding new arbitrage moments. Maybe you're not 10xing like you could on a previous channel, but you're finding incremental gains that aren't costing your business, anything, and you're driving sales that way. So I think the craftiness and like the creativeness is super important. I think in partnerships with brands specifically, it's very untapped as to like what you can do. Like, fashion brands are constantly doing limited releases. Like the biggest fashion brands do a wonderful job of doing limited releases with either influencers or with other brands and collabing, like Supreme and those kind of guys. They always are doing that type of marketing, and they do it because it works really well. They're utilizing both of their audiences, the costs are low, and they're both benefiting. So I think we'll definitely see more of that happening within the medium, smaller size businesses, especially D2C businesses that are working together. We work with tons of partners. That's why we worked with you guys. We have tons of brands within this space that we're great friends with for this exact reason. We want to lean on each other because they're our friends. It's good. Good business is good for everyone. So I think brand partnerships are an awesome, and can be very sales driven way to market your brand.
What's funny is we haven't even like covered so many of the other aspects of partnership marketing, right? Like there's also the celebrity licensing piece, brand licensing piece. But I did want to,
which you guys did a lot of, right?
A ton of celebrity licensing, specific, even collaborations. Like for example, if we did like a Vincero specific product launch, right? We would collaborate with so many different brands. Wine specific, wine and tea go hand in hand. So, I did want to talk about overall, like, going into 2022, 2023, what are your biggest channels of focus at Vincero? And, what are you guys going to be doing?
Yeah, specifically mine. And I think, the businesses, because it just kind of works like that, getting these stores to a profitable place. There's an upfront cost inherently of opening up stores, and understanding how to market stores is a very, very valuable asset to have as we're looking at the full entity of Vincero and who Vincero is. Having great in-store experiences, bringing our like digital acumen and savviness to a storefront is a very I think it's just a cool thing to do, just in general, but also like a very valuable thing to do, both for our customers and also for the business as a whole. We're not a business that has any interest in being like this very broad, brand that's everywhere at every place. So we're not seeking out the opportunity to, have a store in every, 5 stores in every city. Our goal is to be very boutique-esque, and customer driven, and making sure that the experience at all of these different touch points is very curated and very strong. That's just who we are as a brand. So trying to figure out, how to make these stores work, how to utilize them as an asset in a billboard for the business. How can we treat our customers in the area, in a very curated manner? So, I mentioned offline that, I just got back from LA yesterday. We had an influencer event at our store that was amazing. It was just a great experience for, thought leaders in the area. Come see a new brand, relatively speaking. Come see a new brand store. We had a product launch that was happening. So we launched 2 of our new collections in store that aren't out online. Had music, drinks, the whole 9 yards, goodie bags, that kind of thing. An amazing experience that our customers wouldn't be able to get elsewhere. So there's tons of value in that. The week before, we had a VIP customer event within those stores. Our top 50 customers came in. We treated them like kings. We had a distillery come in and do a specific whiskey tasting. We gave them discounts because they've spent thousands and thousands of dollars with us. So creating those experiences are a totally different layer to the brand that we want to get to this year. And by the end of this year, we'd love to start off in 2023 saying, let's go put, a store in X city, or in 2 or 3 more cities, and make sure that our customers in these urban places have a home with Vincero. And anytime they want to get their watch changed, or anytime there's a new product drop, our jewelry comes out, then they have first access to those products. That's what we want to create for our customers in these, specific spots. So that's a big part of what we want to do this year. And then getting more omni-channel. So in wholesale specifically. So back to the the curated experience, we want to find key retail partners that fit our brand from an alignment standpoint, fit our brand from a customer experience standpoint, and that will ultimately grow the business. Nordstrom being, a huge partner of ours. They've been around for 100 years. They're a very family oriented business, and customer experience is top notch. It's a reason why they've been like one of the most profitable businesses during the pandemic. That was, solely a retailer. As retail got drilled, and I'm sure they did to some extent, they also have come out of it more positive than anyone else. So having like a key partner like them, as well as some of these other poignant partners within the wholesale space, allows our business to be much more sustainable, right? Like D2C, there's always going to be problems both online and offline. So us getting offline, having a business offline, is a way for us to create long-term sustainability. And that's what we're really trying to accomplish over these next couple of years, is that the pandemic was what it was. We did very well throughout the pandemic, and we're very grateful for it. But barring other, things that are going on in the world, we want to just create a more sustainable business as a whole, and getting offline is a big part of that. So from a sustainability standpoint, it's important. And then from a customer touch point, it's really important as well. We want to get into physical retail because of those reasons, because of the reasons we're in it, of being able to feel our products, and get that, in-person experience. So our stores and wholesale, I would say over the next year or two, are definitely like our biggest challenges for sure, because it's a totally new space. And it's definitely an old school space too, where there's big boys that, you have to compete with, and figure out your strategy. But those are the 2 biggest for sure.
Shifting gears a little bit, I want to move on to our rapid fire questions. And so basically, I'll go ahead and ask you a question. You can give us a 1-word answer, or you can explain a little. First question, earlier you mentioned you're really big into music, rapper. Who is your favorite hip hop artist right now?
My favorite two rappers, they're synonymous, as far as my likeness of them, is J. Cole and Dom Kennedy. Are you familiar with
I'm
Dom
not.
Kennedy? Yeah, I figured a lot of people aren't. He's from LA. Big like motivator and inspiration as to why I came to California. Very like lifestyle driven rapper. Just like I don't know, just very really spoke to me at an early age of like the beauty of California and the California lifestyle. Along with like the hustle mentality. So those two, 100% are by far and beyond my two favorite rappers.
If you had to move anywhere in the world in your 20s, 30s, 40s, where would you move and why?
Um, it's a tough one because I would say Florianopolis, like I was touching on earlier. But Brazil's going through so much politically and and economically that it would be a tough move, especially like for my girlfriend and family and stuff. And it's so far away from home. To be honest, right now I'm definitely like San Diego is very, very tough to beat. I've traveled a lot. I'm definitely not done traveling right now. San Diego, we kind of were in a bubble during the pandemic. Like we definitely felt it, but people weren't. It just didn't affect us quite as much, both from like like the cases and deaths and stuff. I mean, it did affect us, but not to the extent that some other cities felt. We're not like LA, in the sense of like the extreme lockdowns. Same thing with like San Francisco. It was just like a very like normal. It seemed like one of the more realistic ways to treat the pandemic. Like we did lock down like everyone else. We did, we've got face masks and everything, and we kind of were in a bubble, but it's just such a beautiful place. You still get like the hustle mentality, but I mean, some of the best beaches in the world, and the laid backness is great. So I would say right here is definitely where I want to be right now. If I had to go anywhere else in the world, it would, man, that's a tough
You're
question.
good.
Um, I would say, yeah, I would probably say either like Miami or back home. So either like being with my family and kind of like starting a family back home, or like going to another tropical place like Miami. There's a lot of interesting stuff happening from an investment standpoint in Miami that could potentially lead me there. But those would be the two for now. Florianopolis long term, once Brazil gets their shit together.
No, I love San Diego as well, man. I have a ton of family out
Yeah.
there, so I probably came out there 4 or 5 times last year. Um, who are your top thought leaders that you look up to, whether that's in the growth marketing partnership space or overall, life, D2C?
Yeah. Um, I, a couple layers to this. So I definitely like look up to rappers a lot. Like I feel like it's an undersold thing that rappers know how to market themselves so well, but it's not really like a really discussed thing. Like it's very like natural, like the hustle mentality. I think they ultimately just they can just market themselves and communicate who they are and what they're doing and what they want to do. So I would say like even just artists like to make it in the music business is got to be one of the most difficult things that you can do as far as like career wise. So anyone who does, like, there's a lot to be unpacked and studied about musicians, and not just rappers, just musicians as a whole. So like someone like Dom Kennedy and like J. Cole, like I watched J. Cole growing up when he was like 20 at a small venue in Columbus, and he was nobody, but he was marketing himself so well at the concert that you could just tell he was going to be all who he is now. So that is something that definitely has stuck with me as far as like more to like the business space is there's definitely not I don't really look really up at like one person or two people or anything like that as like who I follow. I would say honestly conversations with people like you and other D2C like business owners and growth marketers, I would say provide more value than a lot of the podcasts that I listen to. So I would say like a lot of the like Extra. I love talking to those guys. Ridge, those guys are great friends of ours. All these D2C guys, it's such a competitive space that everyone is hustling so hard to like figure out their pathway to potentially exiting or just being a sustainable business that I would probably say I look up to them, even though they're like my peers and stuff. I look up to them a ton for sure.
What have been your top two tools, if you had to name, within growth marketing that you just can't live without?
Oh, I'm not a tool guy, but I mean GA obviously for like understanding impact. Trying to think of something that's more helpful than something that everyone else uses. Um Yeah, man. I don't use a ton of tools. I mean, we're very like spreadsheet driven. We use like Grin and stuff for some influencer marketing, but it's not like a can't live without situation. I think I would just combat that to some extent with like a tool isn't going to solve your issue. If you're trying to scale and you notice that the tool can enhance your ability to scale, then that's a great tool that you should access. But yeah, I typically like don't use a ton of tools because I try to be as efficient. It sounds counterintuitive, but I try to be as efficient as possible with like our spend. And some of these tools, like there's a lot of smoke and mirrors. Like you can toss everything on a sheet into a tool and then work through the tool. But yeah, I don't use a ton of tools to be honest with
No,
you.
100%.
We use attribution and stuff like in some influencer tools, but I wouldn't say, yeah, I can't live without them if I'm being real with you.
Favorite movie of all time?
Um, God. I would say Patriot is one of them. The Patriot with Mel Gibson. Um, and trying to give one a little bit newer. Um, Man, so many good movies. Inception is exceptional. Love
Great
that
movie.
movie. Let me give you one more. For some reason, I always go back to like war movies. Like I love war movies. Like Saving Private Ryan. Growing up, I was just like mind blown by how realistic it seemed. So I'll say that one.
What do you typically do in your free time?
Spend time with my friends. Spend time with my girlfriend. I've been with my girlfriend for like 10 years now. We've been together forever, so spending quality time there. Make a ton of music. I'm going to be making music immediately after this call, which I can't wait to do. It's a deep passion of mine. And then just like travel, concerts, just get outside. There's tons of hikes and stuff to do. I'm try to be as active as possible and just kind of pursue things that I'm interested in: business, music, friendships, family. I'm really close with my family, so those are things that are important to me that I try to spend time doing.
What's your life motto?
I haven't developed it yet. No, it's definitely like I don't have like a tagline. Mine is just like following my interests and following my heart for sure. Like I just believe like if you're interested in something, don't let that like don't hide that. You know what I mean? Like if you know something is exciting for you, pursue it to whatever length that you want to. Like I make music. I've been making music forever. Some people think it's kind of like, an odd thing to do in your spare time, but there's nothing that compares to it to me. So I do it, and I do it all the time. So like if there's something that, you want to do, just pursue it. And then things will follow. So I really just follow my heart and follow my interests and let things, lay where they may.
Where will we see you in 3 years' time?
3 years time, man, definitely start a new business. Um, Dropping a couple albums for
Let's go.
sure. Um, which I'll send you some stuff.
Oh, yeah.
Yeah, working on my craft and music. Definitely performing more often. Business definitely takes up majority of my time, and then the next part is music. So definitely doing some more performing in the near future. So yeah, I would say crushing shit with Vincero, starting a new business, and making music and performing.
Wes, my guy, it was a pleasure to have you on, dude. I really learned a lot myself. And I think it's important to kind of explain some of this partnership stuff that hasn't really been shedded across on podcast interviews. And, even just in the DTC community, I feel like it's a very new concept as far as like a marketing channel. A lot of brands aren't taking it as seriously as they should. And I think you provided a lot of context around how important it is and, how much revenue you can actually drive top line if you focus on it. So I really appreciate
Yeah.
you being on, bro.
Absolutely, man. Thanks for the invite. Definitely good to connect. Love chopping it up about business and life and opportunities. There's definitely a lot of opportunity out there for anyone listening. Like, you just gotta hustle. It's competitive, but listening to stuff like this, and listening to you and all your guests, is definitely a good way to learn a lot and to take to whatever you're working on. So, definitely appreciate the invite and look forward to staying in contact and communicating.
My guy, my guy.
Thanks for listening to Breaking It Down with Yogin Patel, your one-stop shop for business success and personal growth. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. Share with a friend if you found value in today's episode. And for more information or to connect with Yogin, subscribe to our newsletter and check out Yogin on Instagram and TikTok at YoginPat. We'll see you next time.